End of this week. I mean, honestly, this is beginning to feel like the longest week ever because there's clearly more to come. Meanwhile, this is what brokerages are saying on the tariffs. Morgan Stanley's view: India's goods exports to the US is equal to 2.2% of the GDP. The direct impact of tariffs will be less severe, they say. Tariff effects will vary by sector and US exposure. They're watchful for the next negotiation round, which now Trump has, made it clear is going to be by the end of this week. Tariffs could weaken corporate confidence and delay capex, impacting growth more. Textiles make up nearly half of India's exports. Pharma accounts for about 40% of exports. This is, of course, in connection with the United States. Quickly, what Nuvama is saying: US tariffs may hurt India's exports, but are small as GDP share. India could offset losses by redirecting exports to other countries. If rupee weakness continues, it may reduce tariff impact. US tariffs may shrink the US trade deficit amidst a weaker USD and higher rates. This will create deflationary pressures globally, hurting trade, growth and earnings. Markets will stay volatile as FII flows may weaken. More global monetary easing might follow. So quite a few other brokerages which have come in as well. There's DAM with a view, and they're talking about specific stocks and goods, chemicals, textiles. That's broadly the space that you might see some impact in.
Okay. An interesting development amidst all of this yesterday was the fact that Mahindra & Mahindra brought forward its results by a day. It was supposed to be posting its numbers today, and then it decided, hey, wait a minute, let's just do the board meeting today, and it posted its numbers. Let's talk about how those numbers stacked up. And we've got Puneet joining in to set things up before we speak to somebody who's got an opinion on this, Saji John of Geojit Investments. Puneet, what did you pick up?
Well, thanks so much for that. So it was definitely a beat on revenue as well as profits for M&M in this particular quarter. Some kind of margin impact, and that's largely because of the EV venture of the company. So they are right now, while profitable, the margins are a slight drag because of the production of EVs, which are still at a lower capacity utilization, but still the overall results were a big positive. The SUV volumes were up 22%, and this led to the revenue market share, a key metric for the company, to be at 27.3%, up 570 basis points. Tractor volumes were also up 10%, and that's increased the company's market share to 45%. Overall, when you see the standalone performance, the EBIT margins were slightly impacted both on the auto side, on SUV side, as well as on the tractor side, and that's largely because of the EV venture, as I mentioned. Finally, in terms of brokerages, Morgan Stanley has maintained a buy with a target price of 3,668, and they've said that the one of the key metrics for the company going forward and key events will be the launch of the new platform on the 15th of August, as well as Analyst Day followed by that in November, and it could give confidence in Mahindra & Mahindra to sustain that industry performance going forward. And finally, in terms of Nuvama as well, they're expecting a 14% CAGR in terms of the auto revenue over the next 3 years, and they've gone on to say that they are building in almost 50,000 units of EVs to be sold in this year and almost 1 lakh EVs to be sold next year as well.